2 years ago, Brookfield Asset Management was king, but now Brookfield Corporation is coming for the crown. Can they overthrow our current champion? Hold on to your seatbelts, folks. This is going to be a good one. You asked me to bring back battles, so let's begin with a whopper. 2 years ago, we had the ultimate Brookfield showdown, and Brookfield Asset Management, or BAM, came out on top. On December 12th, 2022, the old Brookfield Asset Management with a ticker of BAM.A, well, they split into Brookfield Corporation with a ticker of BN, and the new Brookfield Asset Management with a ticker of BAM, but without the A. I know, a little bit confusing at the time, but I think most of us have this sorted out by now. BAM was designed to be a premium asset manager, and thus more of a pure play asset management company. They do not own their underlying assets, but rather they manage funds and investments on behalf of their institutional and retail clients. Their model generates a lot of fee-based income, which creates more predictable cash flows, and thus with this one, we end up with higher dividends. BN, on the other hand, is much more capital intensive, as they not only handle assets, but they're also directly owning infrastructure, real estate, renewable energy, and other investments. They do also generate income in the form of dividends, but it comes from capital appreciation, and thus those dividends are much smaller compared to BAM. By design, BAM is ideal for more dividend-focused investors, while BN is for investors with a higher focus on capital growth. Of course, for this battle, one criteria we will be looking at is those total returns, and they may just be closer than you think. A sub to the channel is your all-express pass to future battles. This battle will be a 4-round fundamental slugfest that in the end will leave one company standing. Of course, since there are numbers involved, we will call on a channel favorite to officiate this match, the one and only Mr. Math. Let's look at our competitors as we weigh in on their surface data. We will start with our defending champion, Brookfield Asset Management, or BAM. At the time of recording, their current value is coming in at $80.36 per share, and they have a market cap of $33.74 billion. Their beta, a little on the volatile side, 1.79. Their earnings per share coming in at 1.57. And their price to earnings ratio pretty high, 51.18. Looking at their price to book ratio, that's coming in at 7.20. Return on equity, you guys know I love this one stat, 16.62%. Their return on assets, 1.13%. Okay, let's take a look at the surface data for Brookfield Corporation. They have a current value at time of recording of $84.13. Their market cap, much bigger, $126.91 billion. And they also have a pretty volatile beta at 1.75. Those earnings per share, 0.66. Their price to earnings ratio, even higher, 127.47. We get a price to book ratio, 2.10. Oh boy, their return on equity, it's lower than I like to see, 2.11%. The return on assets, 2.31%. In this opening round, we're giving it to BAM based on that return on equity, which really impressed me compared to BN. I also liked that we are seeing a lower PE ratio with BAM as well. Now, I did not give them any points for that, as with the growth BN has been experiencing in the last year, a higher PE ratio is, well, it is expected. Round 2 will be cash flow data, and we will once again start with our reigning champion, Brookfield Asset Management. Their revenue comes in at $1.12 billion, and they have earnings of $544 million. Their profit margin, it's actually coming in at 0. Eek. Not sure I like that. Free cash flow, $159 million, and their operating cash flow also $159 million. And their one-year target coming in at $74.73. So that's actually a drop of 7.7%. Oh boy, I hate to see drops. All right, let's take a look at Brookfield Corporation. So their revenue, much higher, $20.62 billion. And they have earnings of $738 million. They do have a profit margin, 1.10%. A little low, but at least it's there. Their free cash flow, 663 million, and their operating cash flow, 3.39 billion. Looking at their 1-year target, that's coming in at $71.05. So that's a bigger drop of 15.5%. One thing you do have to take in consideration with those drops for both BAM and BN is that these earnings that we're using for the data today, well, they come from the end of September. So they have had a lot of growth in the last part of the year. So it is, in a way, making these kind of skewed down. So they do have earnings coming out soon, and I think that's going to change these 1-year targets for both of these companies. With that being said, I am going to award round 2 to Brookfield Corporation. As well, they have the higher profit margin and they do have a higher cash flow in general. BAM did beat them on that 1-year target, but I really don't think the analysts are right about those numbers. So you got to take those ones, I'm pretty sure, with a grain of salt for sure. So after 2 rounds, it is Brookfield Asset Management 1 and Brookfield Corporation 1. Let's look into the returns data. We will once again start with BAM. Now, this is the one with the higher dividend. They have a yield of 2.633%, quarterly dividend of 38 cents USD per share. Their payout ratio on that, 115%. Looking at their returns on their 3-year return on investment, that comes in at 82.93%. Total return after we add in those dividends, 92.17%. That's pretty good. Looking at their 1-year, that return on investments coming in at 53.36%. Total return after we add in the dividends, 57.56%. That's not too shabby. Finally, if we look at their 3-year annualized return, that comes in at 24.33%. Now, let's look at Brookfield Corporation. Okay, looking at their dividend, they have that smaller yield of 0.532%, quarterly dividend of 8 cents USD per share. Their payout ratio, much more reasonable, 52.63%. On to their returns, their 3-year return on investment, 68.80%. Add in the dividends, total return, 70.55%. On their 1-year, that return on investment comes in at 55.88%. Factor in the dividends, total return, 56.74%. Looking at that 3-year annualized return, that's coming in at 19.48%. Round 3 goes to, well, Brookfield Asset Management, as they do outperform big time in the 3-year total return. And they may just squeak out a victory in the 1-year. However, when we boil it down to that 3-year annualized, they beat BN quite readily. Going into our final round, BAM is ahead by 1, so 2-1 for BAM. Oh boy. Looking at our debt data, when it comes to BAM, they have a total debt of 210 million, total equity of 3.25 billion. That gives them a debt to equity ratio of 6.5%. Back when that split happened in 2022, this was at 0%. So they have added to their debt a wee bit. When we look at their cash and cash equivalents, that comes in at $16 million. Okay, let's take a look at Brookfield Corporation. They have a total debt of 252.31 billion, total equity 169.90 billion. Their debt to equity ratio 148.5%. Back in December of 2022, they did have a debt to equity ratio of 153%. So they have been moving this in the right direction for sure. Their cash and cash equivalents, that's coming in at 11.82 billion. We all knew going into this that BAM was overall going to have the better debt situation, and they do get a point for that. However, Brookfield Corporation does need to get recognized for reducing their debt compared to BAM, who has, well, increased their debt over the last, roughly 2 years. Keeping that all in mind, I am going to award this round to Brookfield Asset Management. But let me tell you, Brookfield Corporation did a little better than I was expecting. Okay, I think we are ready to call this battle. Brookfield Asset Management once again wins the battle, despite the strong push we have seen in the last year from Brookfield Corporation. Both companies are good long-term investments for sure. However, BAM edges ahead in overall returns, and I cannot deny the health of their return on equity value as well. Even though Brookfield Corporation lost this battle, they do have one thing going for them. that could make them edge ahead of BAM in 2025. And that is with a lowering rate environment. The reduction in the servicing of their debt could add up to some increased cash for Brookfield Corporation to, well, support further debt or, and this is what I hope, reduce that debt even further. I do have a feeling we will see these two face off again sometime in the future. And despite my money being on BAM, BN could give them a real run for their money. You'll definitely have to stay tuned to see how that turns out. If you are interested in BAM or BN, don't forget to put in a whole heaping helping of due diligence before you place any of your hard-earned money on the table. Let's continue that learning journey by checking out this video on BMO. Thank you for watching, and I will see you in the next video.